I don't think it's going to be that necessary. I mean, I say that when it hits, like, if it goes 20 to 1, I'm going to swap for gold. I'm going to go 15 to 1, I'm definitely going to swap for gold. But I don't have any specific plans to swap for gold. I have plans to, when it's 15 or 20 to 1, I'm going to buy whatever's on sale.
There is a support level on the bottom at 50. So what I'm looking for is it going to bounce off of that? Is it going to break through that? If it breaks through that, that then becomes the new resistance level on the top. And the next level of support that I see is at like 40 to 1. If it breaks through that, if I recall this accurately, I don't think I see any more resistance until we get down into those lower levels, maybe 20 to 1 or what have you.
The gold to silver ratio is testing critical technical boundaries that could trigger a massive revaluation of silver, creating a rare window for strategic asset rotation. A breakdown below current support levels suggests a rapid descent toward historical valuation norms, enabling high-value swaps. Rafi Farber, publisher of The Endgame Investor, and LynetteZang, chief market analyst, identify the number 50 as the critical floor. Once breached, it flips to resistance and clears the path down to 40. They argue that below this level, there is minimal friction preventing a slide to the 20 to 1 or 15 to 1 range. Farber emphasizes that hitting these targets is the signal to execute wealth-maximizing swaps, trading overvalued silver for gold or other distressed assets to buy whatever is on sale without spending new capital. The analysis highlights a crucial air pocket in the charts. Breaking the 40 level removes the final structural barriers, potentially allowing the ratio to freefall into the teens. This movement is critical to the swap strategy, where the goal isn't just to accumulate silver, but to leverage its temporary peak in purchasing power. By waiting for these extreme ratios, investors can mathematically multiply their holdings, trading into gold exactly when the silver mania offers the most significant leverage against the broader market. Now, we present the clips from Rafi Farber and LynetteZang's interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you and enjoy the video.
I don't think it's going to be that necessary. I mean, I say that when it hits, like, if it goes 20 to 1, I'm going to swap for gold. I'm going to go 15 to 1, I'm definitely going to swap for gold. But I don't have any specific plans to swap for gold. I have plans to, when it's 15 or 20 to 1, I'm going to buy whatever's on sale. Assuming we're in the end game and that's it, and we're at 15 to 1, what do you plan on buying with your silver? Like, what do you want to do? That's what I'm struggling with now. Like,
Well, yeah.
okay, well, what am I going to do now?
Because obviously I just did a piece on it, and I know that people talk about that all the time. So I always want to address it and help people make educated choices.
Okay.
But when you're talking about swapping gold for silver, silver for gold, and swapping back and forth, what you're actually doing is talking about a trade. And for me, sound money is my foundation. So I don't want it to wobble back and forth trading it. But, you know, in your process, what was the first thing that we started talking about? What you're trying to accomplish, right?
Yep. My goals.
Exactly. So it's really about the right tool for the job, because when you're looking at silver and gold in any form at all, there is a finite amount of it. And, you know, we were saying earlier, there's gold and then there's gold, there's silver and then there's silver. So your goals, no matter any investment that you're doing, your goals must come first and drive whatever it is that you do. So personally, and also having done so many studies on what happens with gold and silver during hyperinflationary currency resets like we are in, you do see that we'll come to a period where, okay, that ratio gold silver price action will grow wider and then it'll grow lower, which is where I think we are right now. And then as the hyperinflation kicks into gear, it goes huge again. And when I pulled the chart, which anybody can do, it's free, longtermtrends.com, you can pull the gold silver ratio pretty easily, and you can see where they got the 15 to 1. And you can also see when that pattern shifted in 1913 or 14, where it went to a 20th of an ounce of gold. This is a $1 gold coin to 1 ounce of silver, that 20-to-1 ratio. Okay. So, and you have different things for different functions, but you can see it go down, then you see it go up. It actually broke above the highest, according to the long-term trends, was 121 to 1.
Okay.
Now, when I checked it yesterday, it was at like 54 and change to 1. There is a support level on the bottom at 50. So what I'm looking for is it going to bounce off of that? Is it going to break through that? If it breaks through that then becomes the new resistance level on the top. And the next level of support that I see is at like 40 to 1. If it breaks through that, if I recall this accurately, I don't think I see any more resistance until we get down into those lower levels, maybe 20 to 1 or what have you. However, on the flip side of that, if it fails to break through that bottom support level, we have broken above the all-time high to go to that 121. So what I think is going to happen, which would be historically accurate, is we could test it. We could even go lower. But especially with inflation rearing its ugly head, again, in a very vocal way, means high noticeable price increases because of the inflation that they call growth. Okay. It's really inflation, most of it. I don't buy it for the ratio. And if you are heavyweight, if you go in and you say, okay, and you had this experience, so please correct me if I'm wrong, but I built this, so I'm pretty confident in it, is, we did an assessment of what your day-to-day living looks like. And we have it broken out. Okay, so what do you want? You want silver for that function, or do you want gold? Barterable gold for that function. In this case, we're talking about barterability, right? And if it's property taxes, you want gold. Mm-hmm. If it's buying a tank of gas, you want silver. So again, if you are sitting on a tremendous amount of silver, we also take a look at, you already paid the fees to buy that silver. Does it make sense to swap that out? It might not. It kind of depends. But you can pay your property taxes with silver. It's just going to take a lot more and a lot more space. But if you already have it, we're not about churning your account. This is about making sure that whatever it is that you do actually supports exactly what it is that you're trying to accomplish. And so I believe strongly that I don't really care what the ratio is, because I'm not going to trade my silver. I have enough silver for myself and both of my children for 10 years. I think that's enough, right? But if I were to actually weigh the number of ounces of silver to the number of ounces of gold, even in collectible form, I have way more gold. And the reason why I have way more gold is because of my personal goals, which is to take advantage of what's happening. I can't change it, right? I can't stop the rest of the erosion of the dollar. We need a big crisis. It needs to end. I'm trying to have a global impact on sound money by getting redeemable gold back in the system again. It's why I travel as much as I do talking about this, because there's 1% that's ruling us. If we can get 3% of the global population to really quiet revolution, just buy gold and silver, now we can have a voice in this next system. And if it's redeemable, and what that means, just like this, right? When we had these gold certificates, if I did not like what I saw my government doing, I could walk into the bank with this and pull the gold out of the financial system. This is why gold forces fiscal responsibility. Debt, you don't have that same. They can create as much debt as they want. And there really are no limitations to how much debt they can and frankly have created, right? So if we're talking about strategy, first, you want to secure your standard of living. So that community piece where you've got surety and food and water and all of those things, critically important. Get it done. Just get it done. Go to a farmer's market, go to a community garden center, get to know the people that grow your food, give them a day, learn some skills, right? You're going to be in a much better position. But also the foundation must be in sound money. You got to have that sound money foundation, or if they tell you to jump, you're going to have to say how high. And that's not really something that's easy for me to do. I'm the 7. I'm scrappy.
The potential compression of the gold to silver ratio to 15 to 1 represents a critical endgame scenario, forcing investors to choose between speculative arbitrage and long-term utility. As the ratio tests key support levels, a breakdown below 50 could trigger a rapid descent to 40, removing structural resistance and opening the door for a freefall into the teens. Market analysis suggests that hitting these compressed ratios of 20 to 1 or 15 to 1 creates a massive opportunity to swap overvalued silver for gold, effectively buying whatever is on sale without new capital. However, experts warn against treating sound money purely as a trade. The strategy must align with utility. Silver is identified as a practical tool for daily transactional needs, such as fuel and food. At the same time, gold serves as heavy artillery for wealth transfer and for settling significant liabilities, such as property taxes. Proper financial security, therefore, relies not just on playing the ratio, but on holding the right metal for the specific economic function required during a currency reset. Let's get back to the interview.
Silver now, primarily, what is the proximate cause of this? I'm not saying, oh, the dollar is dying. Yeah, the dollar is dying, but who are the ones that are buying silver triple digits enough to move the entire market? It's not stackers.
We're seeing the global central banks buy more gold than they ever have since they started tracking it back in the 50s. And so when you stop to think about what happened in 2008, it was the monetary system. And when you look at this new socialist movement, what are they going to do? They're going to cap rents. You know what garbage that really is? That means nothing. That just hurts the owners of whoever has that building. And we've been, supposed to think of real estate as this great hedge. And it is until you hit a hyperinflationary stage. Then all of the garbage that's been built up underneath it, all of this stuff, it's the only tool they have left, the only one. And I was listening to President Trump at Davos, and he was talking about that we are going to grow our way out of this problem, and we're going to lower rates, right? And what that really means is we need more inflation. We need more of this stuff. Do we need more of that stuff? Yeah, we do, because we are now in this doom loop that we cannot escape from. This is the end of this currency's life cycle. This big fiat money based on debt. And in order to start into a new system, which is a full surveillance system, as you well know, they have to get rid of the debt. Because I questioned for a long time, what is going to justify creating new money in this system? And all of my reading were about two things, either debt or purchases. And now, when President Trump, I think we talked about this before too, but when he signed the Genius Act legalizing stablecoins, my questions were answered. Because it's going to be a combination of purchases along with debt. So, to me, as a student of currencies and currency life cycles since 1987, what we are experiencing is the death of the system. And what we all need to do is we need to have sound money that's above all of this geopolitics and all of this counterparty risk and all of this stuff. It's got to be above governments and central banks. That's the money. And we have to be self-sufficient so that we locally secure all the things that we need to lead a reasonable standard of living. And then, and this will be interesting to have this conversation with you, considering what you do. How about we come together in global community and demand redeemable gold back in the system again?
Peter Schiff has his own Shita, has his own opinion on what things are going to look like in the end. And his opinion is actually pretty mild, that the epicenter will be in the United States. And as the dollar collapses, other currencies will strengthen. And since the dollar won't be able to suck wealth out of other currencies anymore, then other currencies will strengthen. Then other countries will do much better. And that's why he has his whole non-dollar denominated assets thesis that he invests in. He also does gold miners, of course, like gold and silver and gold miners, and yeah, he doesn't abandon that at all. But he also believes that other currencies will do better, whereas I don't. But we're gonna find out if that's true pretty soon. And I don't know. And I also wanted to share an analogy, a story with my son that it was very funny because he's teaching my youngest daughter poker, how to play poker. And so instead of using coins to bet on, he wants to exchange it for tickets, like derivatives. And like he tried to explain to her, like instead of coins, I'm just going to make papers, and then we're going to put the coins in a box. And if you have, let's say, 10, I'm going to give you 10 papers. And he was trying to explain this whole system to her, and she couldn't get it. She's only 6 years old. Like she doesn't
How old's the
understand.
son, Rafi?
He's 11, going to be 12 soon.
That's pretty.
So I said, Fry, you're explaining, a derivative system in a central bank. You're going to be the central bank in charge of the tickets, holding the box of money. And he said, yeah, I mean, the casinos do the same thing, right? They have chips that represent the dollars, and then you can bet with the chips, and then the casino holds the dollars. And then he said, the difference is in the world, you can use dollars for anything. You can buy food with it, but you have to cash in your casino chips before. I had this flash of insight. I said, Fry, that's why the entire world is a casino. Because because we're all spending poker chips in a giant casino.
He's going to be
and
the next
that's why everything is a casino. That's why you have to bet everything in order to survive, because that's what we're in right now. And when the casino is over, the poker chips aren't going to be worth anything. It's sort of like the analogy that Phil used to introduce himself to us, which made a lot of sense. But it was like a flash of insight to my son. He's like, "Oh yeah, everything's a casino." I think they're a decent vehicle to make dollars with gold and silver. As long as dollars have value, then the ETFs will be useful. But once they don't have value, the ETFs are not going to be useful. So they're not any good for the end game, but for leading up to it, they can be pretty lucrative if you use them right. I mean, I bought SLV options, paying a few $100 for some contracts in case silver goes crazy after it hits 50, and voila, that's exactly what happened. So I bought them for like 76 cents, and now they're like $40. It's unbelievable. I'm not saying I'm fearing it, but I do expect it to happen. And when it does happen, I do expect silver to crash one more time. All these companies or these actors, whoever they are, that are buying silver right now at $103.30, right? That was the last one. And they're buying it for whatever reason. They're stockpiling because they think the dollar is collapsing, or they can't get their silver, or they need their silver for whatever, solar panel, whatever they're building. I don't know. But these companies, I'm sure they carry a debt load. And whenever there is a deflation, and there's going to be there's going to be a rush for dollars, not because people want dollars, but because they have to service their debts, and that's still ahead of us. So all these actors that are buying silver right now, they're going to have to sell their silver for their dollars to service their own debts at some point soon. At that point, I would expect the silver price to crash one more time until the Fed starts printing again, and then everything just reflates to where it is now, plus and then some. But Do you see that happening? And if so, like how extreme do you think it's going to be? Because I think it's going to be pretty extreme.
The global financial system has degraded into a terminal doom loop, where the only remaining political strategy is to dilute the debt burden through enforced inflation and rate suppression. This dynamic has effectively transformed the global economy into a casino, where fiat currency functions merely as poker chips, temporary claim checks with no inherent value that must be exchanged for tangible assets like gold and silver before the house closes. Market Analysis warns that, despite the undeniable long-term bullish trend in precious metals, a violent deflationary shock is likely to loom on the immediate horizon. Many commercial entities currently hoarding silver to hedge against currency collapse are heavily leveraged. As liquidity tightens and the rush for dollars to service debt intensifies, these actors will be forced to liquidate their hard assets into a falling market. This forced selling creates a paradoxical crash in silver prices, designed to flush out weak hands just before central banks inevitably intervene with massive money printing to reflate the system. The introduction of mechanisms such as the Genius Act and stablecoins signals the final phase of this cycle, confirming that, while the current game is rigged, the ultimate preservation of wealth depends on holding assets outside the casino's liability ledger. Share your thoughts on their analysis in the comments section below. If you find this video informative, please support us by turning on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.